So what are the best ways to predict SPY, the ETF, overnight? Not only will I share my favorite approaches, I'll also share with you 5 reasons why I think you should care. SPY or SPY is an ETF, an exchange traded fund, which represents the S&P 500, which represents about 500 of the best companies in the United States. So the first reason to care is so goes the SPY, very likely so goes your favorite stock. It's important to know that the top 10 holdings out of the 500 represent about 35% of those holdings. In other words, those top 10 carry a lot of weight, which means we need to pay attention to them. And these top holdings are names that you know, such as Apple, Microsoft, Nvidia, Berkshire Hathaway, Google. Keep an eye on those stocks. It'll help give you a hint of how the market may go the next day. I would say most of the stocks within the S&P 500 are highly liquid, which makes the SPY highly liquid, easy to trade, easy to get in and out of. And that's important because we like to trade overnight. We trade what is referred to as the overnight gap. You've seen it. The market closes at one point and it either opens up or down the next morning. This overnight gap can be a big move, which is highly tradable. But the question is, which direction do you go? Which direction do you point your trade? Up or down? And as many of you who watch these videos know, I create algorithms that help guide us into understanding what direction the market might go overnight, either up or down, based on measuring the pressure of the market at the end of the trading day. Currently, I'm running 2 algorithms, the purple algorithm and the Strade algorithm, both of which are available over at spytomorrow.com. And we offer a free signal at 4 o'clock Eastern Time. So you don't have to pay for anything to try overnight swing trading to make money with the overnight gap. There are multiple ways in which you can use the signals and trade the overnight gap. You can buy the stock, you can short the stock, you can consider a leveraged ETF. I often like to use the QQQ ETF, such as the TQQQ, which is pointing up, or the SQQQ, which is pointing down. You can also consider options, and for those of you who understand options, you can buy calls, or you can buy puts, or a combination of both for a ratio trade, which we refer to as a SPY-T trade. Another signal which you could consider is perhaps the put to call ratio. You could find this over at, say, barchart.com. It's available for free and it'll show you what's going on, give you a hint as to the mood of the market. Another reason why you might care how the market might open the next day is that you wish to get out of a position. You want to sell some options or get out of a stock that you may have held for a few days or even a few years. But what's going to happen tomorrow? Is it better to sell it today at the end of the trading day or the next morning? Sometimes a few more points makes a difference. In my opinion, no matter the signal that you use, if you use it regularly, it should have a derivative attached to it. In other words, a signal for the signal. In other words, a probability or a confidence number. For the Strade Pro, we use a confidence number. For the purple algorithm, we have a probability number. Although having an up or down signal is extremely helpful, having a supportive signal can help you determine how aggressive or conservative you wish to be in your overnight trade. I mentioned keeping an eye on the core stocks in the S&P 500, but it's just as important to keep track of the news in general. Earnings for those specific stocks within the top 10 of the S&P 500, as well as government reports such as the PPI, the CPI, and jobs numbers. Risk management, it's the name of the game. And whether there's market-moving news ahead of us or not, understanding the mood of the market can help us make better decisions and keep us in the game longer. If you're a day trader, understanding the mood of the market can give you an edge as you plan for your next day's trades. Other indicators I like to observe are at the end of the trading day. I like to look at the trend of the market. Is it either going up or down? And what is the volume behind those up or down trends? I also like to take a look at the market after it closes. The first few minutes, the first 5-10 minutes, can often give me a clue as to how the market might be reacting and preparing for the following day's open. It's important to keep an eye on those confidence numbers. Now, just because a confidence number is high doesn't guarantee that it will always be correct. Just like a low confidence number doesn't mean it's going to be wrong. However, over time, you'll notice that those numbers do correlate, and paying attention to them as to how aggressive or conservative you're trading during those times will make a big difference. Overnight swing trading, it is a high risk, high reward style of trading, and these type of traders are more aggressive types of traders, but they're traders who don't necessarily wish to day trade. They like to be active, they wish to be aggressive, but they don't want to spend their time during the day following the charts and the market up and down. But as we've learned, there's more than one reason to care how the market might open the next day. I'll see you in the next video.